With world-class expertise and local insight, Dexus creates value, not just for today, but long into tomorrow.
From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hello, hello. Welcome to the COB. You've got a double act today. I'm Nadine Blaney.
And I'm Juliette Saleh. Nice to be with you, Nadine, on a day where the market didn't really do much at all. We're continuing to monitor the headlines coming through out of the Middle East. Of course, US President Donald Trump leaving the G7 and indicating that Iran is open to talking about, with Israel, I should say, about ending the conflict, but saying that at this stage, Iran is certainly not winning the attacks.
He did leave the summit. He didn't leave the G7 altogether, although some might wonder what his intentions are. What we can say is that after a positive session from Wall Street, where the headlines were market takes Mideast tension in its stride, it appears as if things got a bit wobbly today. You can see there, lost ground through the afternoon hours here locally, and U.S. futures are also negative at this time. The S&P 500 and NASDAQ futures both lower. So look, we've got oil prices accelerating. Clearly the market is not yet ready to move on to whatever the next headline is, and those headlines are coming fast and furious from the Mideast.
Absolutely. So to our themes of the day, and it doesn't seem at this stage that there is a truce in Tehran, which to your point puts oil very much firmly on the outlook. We had that huge spike on Friday, 13% higher in both Brent and WTI, pared back a little, but of course this is the main contract that everybody is looking at, and gold prices also rising today as President Trump urged everyone to evacuate Tehran.
Yeah, so look, there's talk of regime change. How likely that is in Iran, nobody knows, but it most certainly is a watching brief. And then we get to central bank action, which of course is pulling focus this week as well. We've still got to wait a bit for the Fed, but we have heard from the Bank of Japan. It says that it will slow the pace of bond tapering into next year. It does see some risks on the horizon.
Yep, but it didn't change its policy for, I think, the third month or so in a row. Let's have a look at some of the stocks. Of course, still a lot of momentum coming through in these uranium players as we watch out for nuclear warfare. Paladin up 4%, Deep Yellow up 6%, Bannerman up 12%. And of course, yesterday, Jefferies came through with that note, very much suggesting that this is a sector that it is looking at in terms of being overweight.
And there was some buying, I think, from the Sprott Physical Uranium Fund. We might get the details with our expert guests on that one in a few moments. But yeah, here's a look at your gold plays. Juliette, Newmont up by 2.3%. A bit more nuanced, though, perhaps, than one might think, with Evolution and Westgold Resources down.
And having a look at the energy sector, of course, Santos still very much in focus. Treasurer Chalmers, though, indicating that the ADNOC deal is not a done deal, and of course it needs FIRB approval. Woodside down 1.5%, and you actually sent an interesting note yesterday about I think, was it RBC Capital, suggesting that Woodside could be a good play that you switch into, Evans and Partners, you switch into Woodside Energy from Santos as there's still uncertainty over this deal, but RBC liked Ampol amidst the
Mideast tension, which was an interesting take. We always keep our eye out for, well, it sounds crass to say it, but winners and potential losers when you've got these big geopolitical events happening. To some of the corporate news, and look, I've got to say, we're in a bit of a no man's land. We're too early for reporting season. Some companies are coming out with updates ahead of earnings season, but yeah, just sort of small stories today. CSL saying the FDA has approved treatment for its hereditary angioedema, a rare condition which triggers swelling.
Clarity Pharmaceuticals rising on a deal with Spectron RX.
Southern Cross has jumped on an award of contracts for a total of just shy of $46 million.
And St Barbara slipped, 15%. It trimmed its full year gold production outlook.
Yeah, and GGCO Infrastructure REIT came out with a dividend payout, its distribution, I should say, and it sent the shares higher by about 1.2% to $3.88.
All right, let's get to Martin Crabb, Shaw and Partners CIO, who joins us now. Always good to get your insights.
Always good to be here.
So since we've last spoken, gosh, there's just been a little bit of almost World War III occur, but markets have calmed somewhat.
Yeah, it's interesting to see how we trade, isn't it? This morning we rallied on the back of the fact that the US didn't go on with the war thematic, and they seemed to sort of take it in their stride. And up until kind of midday, we were grinding high, and there's some pretty good moves early on. But I think, the Asian markets have been a bit more concerned. We've been selling across Asia. And so we peaked at about midday and have been selling off since then. But yeah, the past couple of weeks, the notable stories are obviously the conflict in the Middle East, but also what's happening in the uranium market. So the Sprott Trust, which buys physical uranium, has raised 100 mil, which then got bumped up to 200 mil. And so they're buying $200 million worth of uranium in the spot market. Now, uranium is mostly a contract resource. It's not, a lot of volume doesn't go through the physical market, so they're going to have to push the physical price up. And uranium stocks are the most shorted on the ASX. So you kind of put those together and it's like you need to cover your shorts. So big moves. Paladin up 15% yesterday, 5% today. I think you had the names up before. All of them are rallying because if you're short these things, you go, well, maybe my short thesis is not playing out anymore. If the physical uranium price is going to go higher on this $200 million worth of buying, why am I short these stocks? So I better cover. And so that's what's happening. So it's very squeezy is the term we use, very squeezy.
Squeezy, I like it. This Sprott Uranium Trust, it's Canada-based. It came up and became all the rage. We were talking about Sprott this, Sprott that a couple of years ago. But this is one that you want to keep an eye on as an investor, because when they're getting active in the physical market, that is concrete. I mean, that's the real deal, right?
Yeah, that's right. And it's an exchange traded product. So it's going to sit there. It's not like they're using the uranium. So they're just going to buy. It's like these ETFs that hold massive amounts of gold. And the best way for an investor to get access to gold, you can go and queue up in Martin Place and go and buy some bullion. You can do that. Or you can just speak to your friendly advisor and say, I'd like to buy an ETF that holds gold, which you can sell and get your money in T+2 or T+1. I think the Sprott Uranium Trust provides exactly the same utility. You can say, I want exposure to the uranium price. I don't have to go and negotiate with a Kazakhstani or a Russian uranium dealer or an Aussie. I can just go and buy it on the exchange. So I think they raised that $200 million from a broker, might have been Canaccord, I think, over there.
Yeah.
Because they've obviously got demand from their customers to get access to the underlying product. And they can't go and buy $200 million worth of Sprott on the market, so they've done a capital raise via an ETF structure. So I think it just, whether you talk to people in the technology space who go, well, there's this data center requirement and we don't want to build coal-fired power to create data centers to run AI models for driverless vehicles. It's sort of a circular argument. We want more nuclear, and that then drives downstream for uranium. So it's that kind of play. It's a big thematic globally, and I think if investors aren't in uranium, I don't think it's too late.
What are the major themes apart from uranium? I mean, we're looking at defence tech type players. AI not going away either.
Yeah, those thematics are still there, right? So I think whether it's data centers and the infrastructure that goes into data centers, whether it's the actual the web companies like Microsoft and Amazon, I think playing the picks and shovels is still the most common theme that we come across along that space. But obviously, as you said, European defence, if everyone runs 3 or 3.5% of GDP, which is where Trump would like them all to go, businesses like BAE Aero Systems and so forth, those sorts of stocks are being well bid. So that's another theme that we're seeing. That's pretty common across the board.
All right, so let's leave uranium there for now.
Yep.
You brought us a chart, as you do, and we really appreciate it. I know you like a chart.
I love a good chart.
So do I. Total shareholder returns in Australia, how are they holding up?
Yeah, look, this is a common sense way to look at the market to say, well, what's fair value? And this is adding up all the share price targets that all the analysts have and just comparing it with the current price. So this line is the difference between the current price of the market and where analysts think shares should trade on a 12-month forward view, and then chucking in the dividend. So you can see that it's down at about 3% at the moment. So if you believe the analysts' forecast on target prices, you've got no upside at all on capital. The only return you're going to get from the share market this year is the dividend yield. In fact, you're going to go backwards on capital. So the market's fully valued, if not overvalued, on this measure. And I've just shown the last 5 years, the market does have periods where it offers you an opportunity, and you can see there that the end of the big sell-off in 2022 when the bond market was going nuts and inflation was out of control, and then more recently during the Liberation Day sell-off, you can just see that CSR spiked up to 25%. So the market does give you opportunities to buy it at a discount, but right now it's kind of bouncing along the bottom of that range. It doesn't really get much more expensive than this.
So does that mean that Aussie equities are, generally speaking, not that compelling?
Overvalued, on that measure, yeah.
Okay. All right, let's look at one of your other charts because we're looking ahead to the Fed.
Yeah.
And of course, as you mentioned, the Bank of Japan, a bit of a nothing burger today.
Yeah, they did nothing, didn't say much. So Thursday morning, 4 a.m. our time. I know you ladies will be up watching.
You've got your alarm set, yep.
You'll be up
Don't
watching
even need to set an alarm. I'll just be so excited at my body clock.
The Fed will do nothing. The Fed will not change rates at all. But it's what they say in the press conference that's more important. So you probably sleep into maybe 5 and then listen to the press conference. So this is the futures market, and you can see that it hasn't moved at all in the past month. So the black line is a month ago, the green line is a week ago, and the red line is kind of as of this morning. We are seeing lower rates. So rates are going to come down. They're just not going to come down anywhere as fast as people think. Now people think neutral in the States is about 3.25. So they're going to take a good 12 to 18 months to move to neutral. So it's going to be a long, slow deceleration from interest rates from a restrictive level to a neutral level. But the most important thing is that rates are coming down. So investors really need to think about that.
Yeah, absolutely.
How do you make money in this environment?
So one way to look at this is how do I lock in my interest rates? Now, in Australia, most people their idea of long term is a 3-month term deposit, right? So they generally, Aussies sit on cash. There's about $2 trillion sitting in bank accounts in Australia. So as the rates get cut, Nadine, those people are just going to earn less money. So how do I lock in those rates? Now, there is a 30-year government bond that's listed on the ASX, GSBK 54 is the ticker. It's $98.50, and that'll pay you about $2.47 every 6 months. So just under a 5% yield every year out to 2054. So that's a very long dated fixed income vehicle. It's obviously issued by the Commonwealth government, so the credit risk on that is incredibly low, if not zero. And it has tracked US 30-year bond yields as well. So you can lock in 5%, which is pretty good in a risk-free investment, considering the RBA is trying to get inflation down to 2.5%. If they're successful in that, that's the 3% or 2.5% real yield for the next 30 years. That's pretty attractive. So the other thing about that is if interest rates do continue to fall and inflation continues to fall, that rate might actually come down, which will see your face value of your bond go up, or the market value of your bond go up. So you can actually make money in a falling interest rate environment by being long, what they call long duration. So the further out you go, the more bang for your buck you get. So these bonds haven't been listed on the ASX for very long, for the past couple of years, but I'm just starting to see more and more investor interest in how do I lock in some longer term interest rates.
Geez, I feel like I need to be educated on those as well. So you buy it on market, these government bonds.
Yeah.
And then they're liquid.
Yeah, they trade like stocks.
Did you know this?
I didn't either. So
Okay.
I'm trying to get my head around it without seeming stupid.
Well,
but,
I'll ask the stupid questions.
No. So you buy it for $98.50,
Yeah.
and then you're getting about $5 a year for 30 years.
Yeah, and then you get your $100 back at the end.
Oh, okay.
Yeah.
Somehow that just went over my
But
head.
then in 30 years, what's that $100 going to be worth? Like $10?
Yeah, but you'll get all that interest along the way, right?
Okay. GSBK 54.
That's the ticker.
Google
Martin
it.
Crab, you're always teaching us things. Thank you so much.
Yeah, most welcome.
Juliet and I, jack of all trades, master of none
Yeah,
sometimes.
exactly.
Look,
I'm embarrassed to say I worked on a stockbroking firm for 10 years and I've never heard of that. Anyway, Martin Crab knows all the stuff. COB, Shaw and Partners guest.
hey, half the battle is admitting when you don't know what you're talking about. Okay, I do know what I'm talking about when I talk stocks. Stock of the day was VBX. It's new though, so again, learnings to be had. Luke Laird from Seneca Financial Solutions and Rudy Philippek Van Dyke from FN Arena join me today.
I wouldn't be surprised to see this close stronger than where it is now. Pretty low volumes, and this is a very tightly held stock. Management insiders here have got 50% of the company still between the guys like you mentioned, like Lau, Tara, ourselves. There's a large portion of the register sort of tied up among sort of long-term holders who are really bullish about the bauxite fundamentals, as well as what they're doing specifically with this project, where they've kind of got the best of both worlds with this sort of Guinea-style ore without the geopolitical risk of, operating in Guinea. So, I think it looks really good value here. I think buying this up to a buck is pretty easy. You're getting a good deal.
Admittedly, small cap mining stocks, they're not necessarily telling you a lot over 3 to 4 years, because in the background it's all about what's the price for the product, and that's of course that will ultimately determine whether it's a good investment or not. You live by the sword, you die by the sword. If you don't know what the expression means, look it up. I rather keep my sword in the living room somewhere, and I have a much lesser risk profile, so I'm not going to be there.
Is not for changing when it comes to these newly listed small cap, particularly miners. So there you go.
All right, let's have a look at the leaders today. Of course, a lot of these gold players, the uranium stocks as well. Deep yellow there, up by almost 6%.
All right, so that is a pretty picture being painted for those companies. Not all was well, though. Helios down by 3.7%. James Hardy, okay, if you didn't watch today's episode of The Call, toward the end of the program, I asked my guests about tax loss selling, and whether or not there's any companies they're keeping a close eye on for their opportunity to get in, as in others sell to their benefit. And, James Hardy was on the list, I'll tell you that, but you might want to listen to the whole episode for more information.
Yeah, okay, let's have a look in terms of the small end of town there as well. You've got the likes of Metal Powder Works, Lotus Resources, Alligator Energy on Crocodile Day, by the way, Elevate Uranium and Aura Energy. I heard Simon from Pinstripe say it's National Crocodile Day or something. Let me just find that while you talk about
I am learning so much today. I hope everybody else listening out there is learning
June 17, World Crocodile Day, annual event dedicated to raising awareness and appreciation for crocodiles.
Okay. We appreciate you, crocodiles. Veeam down by close to 9% to 71 cents per share tonight. Well, I think it's going to be interesting to get that U.S. retail sales read for the month of May.
Yeah, absolutely. Also, import and export prices, they could fall by around 0.3%. U.S. industrial production for May expected to be fairly flat.
Pretty quiet yet again here tomorrow, but we do get the Westpac-Melbourne Institute leading index for the month of May and the trade balance to follow up that BOJ meeting. But the excitement starts to build through the day tomorrow for the Fed decision, which, as Martin Crabb said, we'll get at 4 a.m. What's of most interest, though, will be the media conference that Jerome Powell, the Fed chair, always holds afterwards, because any little crumbs that he drops in terms of when we might see interest rates coming down will be, really watched closely by the market.
Absolutely. All right, we are closing down 0.2% there on the CBO 200. The ASX 200 fared a little bit better, down just 7 points, 8,541. So I'd call that a pretty flat finish. As you mentioned, Helios and James Hardy were the laggards in the session. And a switch out somewhat of energy, but I mean, it's only down a 1/10%. Given that huge run it had yesterday, you'd have to say that's not really much at all. IT and REITs looking pretty solid today.
Yeah. All right. So we will see what happens tonight. Obviously, we'll be keeping a very wary eye on headlines coming out of the Middle East. Also, how the United States and Donald Trump, now that he has left Kananaskis in Alberta in Canada and the G7 summit, bound, I suppose, for Washington to, to be at the ready for whatever happens next. We hope that it's not
Maybe
too bad.
We can call his Trump gold phone and find out.
I don't know if I'll be using one of those gold phones, Jules, if I'm totally honest.
All right, we'll catch you from
style.
9:45 tomorrow.